This is Shah, and this is one of those moments where the market humbles emotional traders and rewards those who actually listen to levels instead of chasing candles. Bitcoin current price is around 85,700. Yesterday we talked very clearly about the liquidity sitting below the previous wicks around 88 and 87,000. That liquidity was not there by accident, and the market did exactly what it usually does. It swept those lows first. Once that sweep was done, the next condition for continuation was also very clear. Bitcoin needed to reclaim 91,000 to regain bullish structure and invalidate the downside risk. Price did attempt a bounce. It pumped toward 90,000, gave people hope, and that is exactly where many traders jumped in late. But the reclaim never happened. Instead, Bitcoin failed to close back above the key level and lost the trendline support that we had been tracking. This was the confirmation point. Once the trend line was lost, the downside scenario activated automatically. If you remember the discussion from Sunday, I clearly said that losing the trend line opens the door for a retest of the 85,000 region. That level was not a guess. It was a structural target, and now price is sitting exactly there. This is not panic. This is not manipulation. This is structure playing out step by step. Right now, the most important area to focus on is the order block around 84,000. This zone matters because it is where strong buying previously entered the market. It is a demand area that has history. As long as Bitcoin holds above this order block and does not give strong daily closes below it, a reversal remains very much possible. You may see volatility here. You may see wicks below and quick recoveries. That behavior is normal around such levels. So what matters is acceptance, not noise. If price holds this zone, stabilizes, and starts building higher lows, Bitcoin can attempt to reverse back toward the broken levels. The first real sign of strength will be reclaiming the short-term structure, and only after that does 91,000 come back into focus. Bulls need to earn that level again. It will not come for free. At the same time, we must respect the invalidation. If Bitcoin fails to hold this order block and starts closing below 84,000 with strength, then the market opens up for deeper downside. That is why this zone is a decision point. This is where buyers either defend and reverse the move, or sellers take control for the next leg down. The most important takeaway here is this: nothing about this move is random. The liquidity was swept, the trend line was lost, the target was reached. Now price is reacting at the next logical area. This is how professional markets move, and once you start seeing this, the fear disappears. Do not rush trades here. Let the market show whether it wants to defend this zone or break it. Patience at decision points is what keeps traders alive long term. If you are finding value in these structured no-noise breakdowns and want to stay aligned with daily market logic instead of emotions, stay connected, keep learning, and trade with clarity, because the chart always tells the truth before the crowd realizes it.